Welcome back to the Money Advantage podcast. This is Rachel Marshall and Bruce Wayner, co-hosts here that talk with you regularly, but we have a special guest with us today, and I would dare say a very special guest. So Wesley Smith, I know you go by Wes, but I want to introduce you formally and officially today. So Wesley is a client of ours, and we wanted to invite him on the podcast to tell his story and really just be able to showcase what you're doing in your life with infinite banking. So Wes, thank you so much for joining us today on the show.
Hey, thanks for having me. I've been listening to you guys' podcast for a couple of years, so nice to be here.
Very awesome. Well, Bruce, what thoughts do you have kind of before we jump into the conversation?
Yeah, Rachel, we try to service business owners as much as possible. And I think, we all fall into, especially the last couple of years with, I don't know when people are going to be listening to this, but with the COVID situation, we all kind of fall into this. If we're not really careful with our mindset, we all fall in this kind of doom and gloom kind of situation. And then when you throw in government interventions and so on and so forth, all of a sudden, it's kind of hard to be upbeat. But I think what Wes brings to the table, every time I talk to Wes is upbeat. And I think the reason Wes is upbeat is because he's a true entrepreneur in his mindset. And he knows that he has talents and he's always working on his talents. He's always working on the business. He's always looking for other ways to actually control things in his life. And he says then to himself, and I'm putting words in his mouth, but I mean, Wes can probably then verify this. He says, I don't care what everything else is going on out there. I'm taking control of the situation and I'm going to make it happen. And that is why I am positive that going forward in our nation, our country, we've proven this over and over again, that business owners actually lead the society in the way it's going to happen and how it's going to be successful. So Wes is going to share some of the ways he thinks and how his business goes and how he uses his infinite banking concept. And I'm really thinking it's going to be a very beneficial show for everybody.
Absolutely. And so before we kind of get started, I know that if you're listening to the show, you probably are thinking a little bit across the grain of the status quo. You're probably in a position where you do, like Wes and like Bruce and like myself and like everyone else who we've had on the show, think a little differently and want to be in financial control. Chances are you're probably a business owner, or you're looking to start a business, or you're going towards business ownership. And chances are you're probably an investor of some kind as well. And specifically, you're probably very interested in real estate investing. So there's a lot of commonalities that we see in people who are very interested in taking control of their financial life. So just to share a few of those things off the top, Wes, I know that you're a real estate investor, you're a business owner. We're going to talk about both of those things. You're a husband, you're a father, and you're a great guy who is really taking control of your life. And so let's go ahead and kind of lay out some of the backstory of who you are from your own words.
Yeah, well, thanks. I guess I'll get started with, I started back in the professional career, I guess back in the mid 2000s. We won't get into specific years there, right? Time goes by so fast, but I got started basically doing, I worked for my dad's plumbing company at first. He had a family plumbing business for 30 years. And so I started working for him for 3 or 4 years and decided that I kind of want to get out into the world and kind of just do something else for a bit, and it's kind of tough working tight knit with the family, but he had a great company. And so I had a friend that had a job in telecommunications sales, basically door-to-door B2B sales. And he was showing me how much money he was making. I said, well, you know what? I think I want to try that. So I got a job doing that. And I think that first sales job really solidified the fact that I wanted to be an entrepreneur, like I already wanted to be anyway. Which is the reason why I joined my dad's company. And so, just learning to be in that sink or swim environment for month to month, every month is a new month, right? Is kind of what kind of helps you, I think, learn what you need to be a business owner in general, right? And so then after that, I saw basically from there, it evolved from being a commission, salary plus commission employee to I saw my friends go out and start an agency selling the same telecommunication services, making a residual income on those contracts instead of just making a one-time commission. And I was like, wow, that's pretty good. Start doing the math and you go, wow, every year I'm going up $5,000, $6,000 a month, 10 grand, 15 grand. Okay. So I do this 3 or 4 years and I've got a pretty good residual income. So I decided after about 6 years to do that with them. They gave me a great pass through under their brokerage. And so built some good residuals doing that for a while, but it was kind of a slow go and I still wasn't in total control of my destiny. And so during that period, my mom and I'd already been interested in real estate investing. So I read tons and tons of books, just really wanted to get into it, was chomping at the bit. And this was right during the peak of the real estate boom, right? About '07, '08. And we bought a couple of properties that we thought we did okay with. Well, we actually did. I mean, they cash flowed, but then the market bottomed out, 2 years later. So what do you can't really foresee that coming up. But we learned a lot during that process. And more importantly, we learned how to do marketing to find motivated home sellers to call us, to go on appointments, to structure deals and make offers and things like that. So after coming out of that, the bottom, we started buying and wholesaling some, where you put them under contract and you sell it to another investor that wants to buy and rehab it or buy and hold it for a rental. And so we were making money on contract assignments and things like that. And then we started doing retail, or basically rehabbing the property. So we would actually close on it. And that's when I got my, first taste of dealing with banks and qualifying for loans and hard money and all of that stuff that you got to do, jumping through hoops on one leg with a bag over your head for the bank or whatever. So, all of that was just a tough process, so we learned how to kind of, creatively structure deals with home sellers directly. And during that time, I learned digital marketing. I learned SEO, websites, conversions, pay-per-click ads, and all of that stuff. So I really enjoyed that. And my mom and I still run that real estate investing business today, but the prices are kind of crazy at the moment. So we've taken a small break. We're just managing our portfolio at the moment. And so during that time, I started a digital marketing agency. And that was about 2014 or 15. And then we started niching into just working with tree service companies who are kind of that growing type tree service company that want to, keep the phone ringing, get their internet marketing right. So that's kind of my backstory of business and kind of how I got to where I am today.
Well, you have sure learned a lot along the way. And I think that's true of anyone in business as well. There's those changes of direction that you don't foresee when you start, but you learn so many new skills that it provides this equipping to be able to go in a direction that really is that focused pathway. And it's really interesting that you have landed in not just digital marketing for anybody, but you've really niched down to a tight space that you're able to provide that very streamlined, very focused service. And so you've definitely shown that just through that business process, you've definitely grown tremendously. So thank you for walking us along that backstory. That's fascinating in and of itself. So where in this process did you first come across the idea of infinite banking? You mentioned that you stumbled into it almost by accident. So let's hear that story.
That's correct. I've heard a lot of people say the same thing too. And it really is, it was almost an accident. So my brother, interestingly enough, who's younger than me, said, "Hey, I think you need to look at these whole life insurance policies." This was probably 6 or 7 years ago. Gosh, probably it was after I was married, but I think right after I had my son, and he's almost 6. So it was probably 2016 timeframe. And so he set me up with a captive agent, somebody who represents one of the largest mutual carriers in the country. And great guy, talked to him, ended up buying a policy because, you need one when you're married, you have kids. And so you think about it. And really that thought, I don't think comes up into your brain before that happens for some reason. We're just all like kind of just conditioned to not even think about life insurance one bit until we get married and have kids. And then all of a sudden everybody's beating their door down talking about life insurance to you. So that's kind of how I got introduced to it. And so I bought a policy and I started paying the premiums. And I was just unsure of where my money was going when I paid the premiums. Right? I just had no idea what was going on. I was like, I'm paying this amount, but yet I've only got this amount in cash value after paying my premium. So what's the deal here? Like where's this money going? So after about a year and a half, I really just made it. And I would talk to my agent. He's great. He was always telling me what's going on and this and that, but it just didn't sink in. I couldn't grasp it. So I said, you know what? I'm going to learn this. And so I went on a mad search, like a lot of people. You get in all these internet rabbit holes, whether it be YouTube or Google search or whatever. And around that same time, I think I found you guys' business owner guide where I downloaded it.
Oh, yeah.
At some point. I think you probably still have that, right? Where you can download it, read about it.
Yep.
And so,
yeah. Oh, yeah. Yeah.
Yeah.
I'm trying to think if that was the cash flow generator. There was one thing that we had way a long time ago, but there was also the Entrepreneur's
Guide to something, I think, or another.
Yeah. Okay.
Yeah.
It was probably the Entrepreneur's Guide to infinite banking.
Yes. And how to make your money work in 2 places at the same time.
Yes.
Yes. Yeah. Awesome. And so it's very, very helpful. It just created this easy to look at visual to kind of know what's going on with these policies and how to store your money and all that stuff. So I kind of had that. And then I was looking for more. So I found, all these YouTube channels and different things like that. And that's where I ran across infinite banking concept. And so once I found that, And I ordered Nelson's book, Becoming Your Own Banker. After reading that book, it was as clear as day what I needed to be doing for the rest of my life with all of my savings and the money, right? Because I had been down the road of corporate jobs and having 401ks and just having that pit feeling in my stomach that, wow, this is nice to have this account over here, but I can't do anything with this money for the next 35, 40 years. Like, what am I going to do if I come across a real estate deal and I need access to 50 or 100,000 or whatever the case may be? And you just really can't do that with a retirement account like you can with infinite banking policies or whatnot. So after learning about all that stuff, I just kept on reading and reading and reading. And I probably read a dozen books on the topic. I just really liked it because I had more control of the money that I was putting in there. And so, along the way that, when your income rises, you can kind of keep adding more policies. And so I had like I said, a captive agent at first and just kind of kept moving along with that. And, kind of once I learned the process, then, I wasn't afraid to kind of start more policies. I guess I'll stop right there if you guys have any questions about that part.
Yeah, well, one of the things, Wes, that I think probably a lot of the listeners, you made one comment, which is kind of true, but some of our real estate investors are going, well, no, you could use your retirement if you self-direct, an IRA for real estate. And I frankly, I try to tell people I would stay away from that. First of all, if you're still at your company, you can't use the 401k to do that. And self-direction, just to clarify for all the listeners, self-direction comes with a lot of paperwork. And if you don't do it properly, I've seen a lot of nightmares with that. And the other thing that I don't like with real estate, and you and your mother certainly understand this, and I understand it because I own real estate. It's tax deferral when it's in a self-directed IRA, but it's actually a tax deduction now in this tax year when you're doing it with after-tax money. And that is a very important concept for people to understand, in my opinion, because especially in our high interest rate environment that we're going into right now, inflationary environment, a dollar today is worth more today than it's going to be worth into the future. So if you can capture those deductions now, so you have more real money to use now, rather than tax deferring into the future where, oh, by the way, there's no promise that there won't be higher taxes in the future, then that is just a concept that I think a lot of people need to wrap their heads around, because they're getting that story about tax deferred, and you can self-direct it for real estate. And I frankly, you do whatever you want to do, obviously, but I think people need to stay away from that. So,
well, and I did that too. I also did have a self-directed IRA, and I did that. I made my own investments, had some private lending going on. But as soon as you get those notes due and you collect back and get your principal back, you still got to actively find things to make a return on. And that can become exhausting if you're already a business owner, or if you're already busy doing other things, right? So then it just sits dormant in your account unless you have it out there put to work. Whereas with the infinite banking policies, you're at least earning a good 4 or 5% tax deferred every year without doing anything. So I like that aspect better. Plus, you're getting the death benefit, you're getting everything else included, the liquidity and everything else. So that's the reason why I wanted to kind of go that direction too.
Yeah, and I tell people if that's the only capital they have, then maybe that's what you do to get started self-directing. But I just tell people be very, very careful, because it's one of the benefits of being old. You see a lot of things, but it's also a deterrent from being old, because you see a lot of things that have gone wrong too. So Hey, so talk about the process of how you've used your policies to obtain loans, pay back. You're thinking of, you have them on your children, so on and so forth, and why you did all those multiple policies.
Yeah, well, as I kept reading and increasing my knowledge base on infinite banking concept, it is infinite, right? You can't really have too many policies. And like Nelson says, you can't get too much insurance past the underwriters. They won't let you get it anyway. So you can keep trying to qualify, and you can keep trying to get more and more, but it's kind of based on your income. It's based on a few other factors. So you can get as much as you can get up to that point. And every time you start making more money, of course, you can open up more policies. So that was my line of thinking. Was I'm not to the point where I can pay my income in premiums. That I'm still trying to wrap my head around, but as much as I can possibly pay is where I'm at today. And so, once you outgrow the first policy and you notice that you're building up some additional savings, it's time to open up a second one. And I really like prepaying policies for a year or two in advance. But if you get to the point where you're prepaying all of them, you may as well open up a new one and start that instead of prepaying everything early. So you start making more money. And so the way I've done it is just every time I have an additional cash flow, I just make sure I open up a new policy, because the policies that you opened up several years prior, a couple of years prior, if you continue to fund those with your base premium plus the paid up additions, you're really funding them max over the first several years. So if you get to a point where maybe you have reduced cash flow for a year or two, it's not going to be a problem. You've already been funding those for several years. Your newer ones, you want to concentrate on maybe funding those with the paid up additions. And then the old ones, you can just drop down to your base premium, or even take a policy loan to pay the premium for a few years if you need to. So once you wrap your head around kind of how to use them and how they're very versatile, right? It's not like you're just completely locked in with a payment for the next 20 years. You can go paid up if you get to a point where you don't want to pay any more premiums. You can elect to have the dividend pay the premium at some point down the road if you want to. So there's a lot of different things you can do with them. They're very versatile. And then the way that I use them is hey, we bought a new house a couple of years ago. In the backyard, we wanted to remove 6 or 8 trees, lay sod back there. So we used a policy loan to do that, slowly paying that off. And I just want to make sure I've always got plenty of savings to pay my initial premiums every year. And I take policy loans towards the cash value whenever it's time to do like some sort of like house upgrade, which you can find a house upgrade to do, once a week if you look for it. We're trying to kind of keep those on a minimum at this point, but yeah, it's, we've used it for all different types of things. I mean, trips, you want to go on a nice vacation, do it that way. And if I know that all my premiums are paid, then I can, reduce the policy loan as I see fit. And the greatest part about the policy loan feature, and you guys have talked about this 100 times, there is no payback schedule, right? There is no fixed monthly payment that I've got to commit to, like there would be with a home equity line of credit or a personal loan. And there's no time frame that I have to pay it off. So if I get a chunk of money, I can pay it off tomorrow. If I need to wait 3 years to pay it off, I can wait 3 years to pay it off. So that's kind of how I use it. We love the flexibility of that.
There's so much that you're talking about, all of the things that we share, but you're packing it into the practicals of how you're actually using it. So have you used your policies then to invest in real estate as well?
Not yet. So that's kind of the next item on the list, is now that I'm building this capital and it's getting, sufficient now where we can, I can start kind of doing that. So my thoughts is probably create another business entity for like personal holdings and things like that. So what I would do in that instance is usually probably just take a policy loan for a down payment for a property, perhaps a small multifamily property or something like that, that cash flows, and I take the cash flow to pay down the policy loan. And then once I pay down the policy loan, I've got both my cash values back stored to 100%. And then I've still got the asset there to cash flow for the rest of my life. I want to keep it or refinance it down the road when the equity increases, if I increase the rental rates or whatever. And then I can take that cash out refinance to pay off the policy loan that I took out several years prior. So I think it's just knowing that maybe you've got a windfall coming down the road. And a good book to kind of know how to use that is Building Your Warehouse of Wealth, Nelson's second book, which kind of teaches you that if you anticipate you've got some windfalls coming, maybe selling a property or two or selling a business, then don't be afraid to capitalize policies and take a few policy loans here and there, because eventually you're going to sell the asset. It's going to free up a lot of cash, which you can then take and pay off policy loans. But you can't go back 10 years ago and start a new policy. So you may as well start them earlier than later. So that's kind of
that's the entrepreneurial thinking, because you definitely are looking at, that you're creating a bigger future than you have right now. And because you have the capital, it gives you the capability to do so much more, which is the reason why you're saying there's flexibility, there's versatility in having multiple policies. There's just a lot more options that you have, because there's multiple pockets of cash that you can grab and use for anything. You're talking about trips and home upgrades. You can also use them to invest in real estate, as you're talking about, or buy a new business, or invest in your business, or pay for marketing in your business, or hire that employee that you need in your business to be able to grow. And any one of those things is an investment. You're thinking of a bigger future than you have today, which is then going to increase your cash flow, increase your ability to repay loans and free up that capital again, or increase your cash flow so that you can fuel and fund new policies.
So Rachel, one of the things I want to just clarify for our listeners, because first of all, I got goosebumps to listen to Wes, because Wes really understands what's going on. But just like me sometimes as an educator, because I feel like I educate all our clients, sometimes I know it so well, I don't necessarily convey the thoughts properly so that a neophyte could understand it. So one of the things Wes said was he prepays his policies. Well, that means something different to everybody else. Some people think overfunding with the PUAs is prepaying the fund, your policy, and it is. Okay, because like Wes said, what you could do then is just go down to your base premium, or frankly, you can actually take a loan to pay the premium. And there's another one which he didn't actually mention, is where you could actually reduce the volume, just the death benefit on the PUAs that's equal to the amount of PUAs you made in the past to pay this premium. But what Wes is really talking about is using a feature that most life insurance companies call a premium deposit fund. And a premium deposit fund, for everybody that's wondering, it's actually, think of it as a savings account that is outside your policy contract, but your money is sitting at the life insurance company. Now, for you storing that money for future premiums, the life insurance company actually gives you interest. Well, they do it two different ways, depending on the life insurance company and depending on the contract. They'll either give you interest on that, which, by the way, that interest is taxable because it's not within the contract, or they will reduce the premium that would have been equal to the interest that they gave you. So they kind of give you a little break on the premium, depending on, once again, depending on the company, depending on the product, so on and so forth. However, what I've noticed with these new designs, because we've talked about this, the last couple of years, in 2020, we had the companies all came out with new products because the mortality tables changed. And then in 2021, the new MEC limits came out, so that as of January 1st this year, the new MEC limits came out, so they changed all the products again. In doing that, many of the companies now have changed their premium deposit funds on their new contracts, not their old contracts. They can't do that. That's what Nelson used to always say. It's a contract. You cannot change it. So, but the new contracts, they still have these features, but they're more limiting. So example, if you put the premium deposit fund in the old contracts, and before your anniversary date comes up where your premiums due, if you want a portion of all that back, you can get it back. And then just use it for another project. And then of course you got to come up with the premium on your anniversary date. However, most of the new companies are saying, once you prepay it, if you take it back, we actually close that rider. And the reason they do it is because what they were finding is these insurance companies were paying 1% savings rates at the insurance company, and people were using it like the bank, putting it in, getting that 1%, taking it out and using it for other things rather than their premium. And it was too much administrative costs, and it was too much expense for the insurance company. So now they say, hey, the true intention of this was for future premiums. That's why we call it the premium deposit fund. But people were using it like a bank, taking it in and out, and it was causing too many expenses for the insurance company, so they put some restrictions on it. So just Bruce, in case people are wondering what he was talking about, I wanted to clarify that.
Yeah, and so on that note, so Bruce, is it true that even with the new MEC limits and the new policy tables, are the premium deposit funds still a better rate of interest if you put your money there than in the typical bank savings account?
It is, but here's the thing. I'm actually, I obviously, because I educate people on the contracts, I tell them that provision. But because if you're going to want to control your money, right? And that's what most of our entrepreneurs want to do. They want to control your money. If you're going to put it in and then all of a sudden you're going to have a need for it before the next premium and take it out and the rider closes anyway, why even start the process?
Right.
You know, let's find someplace else to store that money that might be working for you until your premium comes. There's been so many changes. There's been so many changes the last 2 years that sometimes, Wes, you know, you're talking to like your brother or you're talking to your friend or looking over the neighbor and talking to them and they say, hey, I got this. And then they go and research it and they say, well, it doesn't work like that. Is Wes not telling me the truth? And I'm saying, no, Wes is telling you what he has, but they've changed the contracts. And they always change the contracts what's better for both parties, because that's what a true economy does, right? So it's better for the insurance company, but it's also better for the policyholder. That's what the President Trump administration, when they changed the MEC limits, you actually have access to more cash early on in the contracts, but the death benefits were lower, so there's less liability on the insurance company, but the policyholder actually gets access to more cash value early. So there's a trade-off. It's best for both companies. So I just wanted to clarify that so our listeners didn't get too confused over if they have to drop the rider.
That's really good. And I think, the whole idea though, Wes, that you shared, that you're thinking about in advance, I have this growing capital. You're not just thinking about next month though, or next year. You're thinking ahead, not only for paying premiums this year, but you're saying, how can I make sure that if I'm going to start a new policy, I've got enough premium to handle a couple of years of premium payments. And you're also thinking the same way that my husband and I think in our policy ownership, that if I know I'm going to be using this policy and taking loans from it, I want to make sure that I have cash flow or cash available to repay those loans as well. If you dedicate all your capital to the policy, then you could say, well, now I've taken a loan, where's the cash going to come from to repay that loan? And if it's for an expense, like a vacation that's not going to produce cash flow in your life, you're going to want to make sure that you already have that cash set aside. So I just wanted to point out that really responsible thinking that you have as you're managing your cash flow really well and being a good steward of your resources, saying, how do I do the most with this money? But how do I think about all of the needs, the cash needs that are going to come with this commitment?
Yeah.
So,
absolutely.
So Wes, let's take it another step further. So what's your thinking specifically on insuring your wife, insuring yourself, insuring your kids? Where's your thinking at with who you're putting policies on?
Well, I think just diversification of capital and savings is a good idea anyway. And so I think with me, I think at this point it's 4 with a 5th in the works. My wife, there's 2 policies, and then each child has 1 on themselves. And the ones for the children are going to be kind of their college funding account, maybe first car account type thing like that. So once it gets time for a first car, we maybe buy the car with a policy loan, then pay that back. Once they start going to school, use that for some tuition, things like that. And also with some of our own policy loans. But it's really set up for, when you look at these illustrations and how long they're going to be in play, you say, well, I'm just not going to be afraid to put all of my money in these things. So if that's the case, then, may kind of spread that out, over pretty much everybody in your family, because you can only get so much on one person anyway. And so these also, create individual accounts, where I've read a few books too, as well, where you can kind of earmark one of these policies for, your car loans. When you go pay cash for a car, you can use it for a car. Another one may be college funding. Another one may be home repairs or home renovations. Another one could be college funding, like we're doing for the kids. And so when you look and see the amount of time these things are in existence, it's not 5 years from now, it's not 10 years from now, it's not 15 years from now, it's 30 years, it's 40 years down the road that these are going to be active and in force. You start looking at, wow, once I get to that point where maybe I don't want to, work as hard as I do now. I don't think I'll ever just completely stop working, but maybe I work part-time, do consulting or something like that. And I want to start reversing some of the premiums I've been paying in, back into my pocket as income down the road at some point. Well, then you've got that option, right? You've got that flexibility. And so you just know, like, as you continue to put your money in these policies, that it's yours, it's going to continue to grow. And the life insurance companies have been around 5 times longer, 6 times longer than I have already. So do I think they're going to be around another 30, 40, 50 years? Absolutely. They're the most frugal people with money, organizations. They have the most conservative investments, all those different things. So I know that they're going to be, there when I need it the most. And so I like the idea of what I've been looking into it is, you just keep storing all of your money in these policies. As we continue to make more income and have more savings accrue, we just keep starting new ones. And they come with all these additional benefits that you would have to pay extra for if you have a traditional retirement account. Long-term care insurance, any of these other riders that they just come with by default anyway, when you buy an IBC type policy, you would have to pay extra for those things. And those are more risky because what if you don't need a long-term care policy, but you've been paying into for 20 or 30 years. Whereas with these policies, you just get that by default a lot of times with the riders that come with them. So there's just so many moving parts. And another thing that I want to mention too, that you guys had a podcast episode, I don't know if it was a year, maybe more, about reverse mortgages and the scenario where you can use that in kind of in with your death benefit, right? So I started thinking about that. I was like, well, most people's largest asset they have paid off in retirement is their house. Maybe their house poor and they're house rich, but they're cash poor, where you can use that reverse mortgage strategy because you've got so much death benefit with these whole life policies where you don't have to maybe pay yourself as much of the, the policy income. You can have some of it coming from your reverse mortgage. And so I like the strategy of maybe having the lifetime annuity with your equity coming in every single month. And then in addition to that, your cash value, maybe, pulling income from your policies in addition to that. So if you do, pass away, you're giving your heirs this house. Yeah, it's got a loan on it, but they're going to have plenty of death benefit to pay that off if they want to keep the house instead of just, inheriting a house with a big mortgage on it. And they don't want it anyway. So I think all these strategies and everything, there's just so many moving parts and good ideas and things that it just gives you more control and flexibility for your future, honestly, so that's why I do it. And I know why I'm doing it. And so that's kind of where I'm at with it.
So
I
Rachel,
love the long-term thinking. I want to point something out, but you go ahead, Bruce.
No, I was just, this is why I really wanted to have Wes on the show, because Wes is actually thinking long-term, and Nelson preached that over and over and over because he was a forester by trade. He always used to say, and I've said this on the podcast a million times, the best time to plant a tree is 70 years ago, but the second best time to plant a tree is today. So get moving on this thing. The other thing, just to espouse, because I know Wes is a Nelson Nash fan. I'm a huge Nelson Nash fan. I mean, he was my mentor, for God's sake.
Same.
So one of the things that Wes is talking about is, you're always going to have capital available. You're going to have, and if you're an entrepreneur, you're going to have influxes of cash. I just like to tell the listeners what happened in a think tank the year before Nelson died, which is, I think, was 3 years ago now. The think tank, every year, the Nelson Nash Institute has a think tank, which I'm going to in 2 weeks. And Nelson, or David Stearns, who's Nelson's son-in-law, who now owns the company, was talking about how Nelson called him into his office one day and said, David, do you have any loans out on your policies? And he goes, oh man, my wife and I just took $500,000 out of all of our policies a couple of years ago, and we did a complete remodel of our house. And I had all these, hundreds of thousands of dollars of loans. And Nelson is always telling people, you'll pay back your loans, pay back your loans. He goes, so I'm really nervous talking to my father-in-law, who's like the guru of the infinite banking system. And he says, yeah, I actually have, several $100,000. And Nelson goes, good. I'm about to graduate from this earth, and you and my daughter are going to get millions of dollars of death benefit, and you have to have some place to store it. So you now you can pay those loans off. So my point is that, yes, we want you all the time. And Wes has this thinking, we all to have somewhat of a plan to pay policy loans off. But one of your plans can be to look and say, hey, I'm going to have an influx in cash in 3 or 4 years, whether it's selling a piece of real estate, which I did several years ago. I sold a piece of real estate, had a huge profit, paid the capital gains, because my CPA and I talked through that. We said we don't want a 1031, and I had some policy loans, so I used that. Selling a business is another great one, but inheritances, $60 trillion estimated are going to flow from the baby boom generation to the next generation in the form of inheritance.
Bruce, you still there?
So these are
Hey, Bruce, do you want to back up just to where you said $60 trillion are going to flow from the baby boom generation? Your internet.
Yeah, I just saw my internet said it was unstable. $60 trillion is flowing from the baby boom generation, which will be a windfall. Where are people going to store it? Well, they can store it in their specially designed life insurance contract. So I just wanted to piggyback on that, on how you use your policy loans and then also have a plan to pay it back. But paying it back doesn't mean you have to have a monthly schedule to do it, but you have to be responsible in order to do that. You got to think long term. You and I talk about long term thinking all the time, and Nelson talked about long term, and obviously Wes is talking about long term. So thanks for sharing that, Wes. That's just an awesome concept for people to understand. Too many of our real estate investors come in and say, I want to capitalize this the first year, and then I want to take a complete policy loan, and I want to go do this, with it. And I'm like, no, let's capitalize this thing for a couple of years, and then let's go do it. And I've actually told them, if you don't want to do it that way, then, go buy your piece of real estate. You're going to have cash flow, then take the cash flow and use it as a monthly premium to start your policy. It's actually better to do it that way, I think, than to just have this mindset. I'm going to take a loan right away and go buy something with it, so.
There's so many pieces.
Ahead,
I wanted to just point out, if you do not use life insurance, and just say you want to still accomplish all the same goals, and you say, well, here's my college savings plan for child A, here's my college savings plan for child B, and however many children you have. I have 2, some people have 20, so the idea of, I have to compartmentalize all of my money and peg it for some future use. What happens when you don't need it for that use, but you wish that you could have used it for something else, or you wanted to use it for something else along the way? So the reason that specially designed whole life insurance or infinite banking is so valuable is that you can use it for anything and everything. You don't have to allocate up front, I'm only going to use this policy for long-term care. And Wes, as you were saying, having an idea in your mind, this is my policy for auto loans, this is my policy for college funding, that's a great way to think about it. But if you change your mind along the way, you have the flexibility to do that, and you're not beholden to some other organization that says, no, sorry, this is the only thing you can use your policy for. So I just wanted to point that out, how much wisdom there is in providing yourself with the ability to change your mind. And then just the whole idea, go ahead.
No, I know you're going a certain direction. I don't want to go in a different direction. So go ahead and finish.
I was just going to say, the idea then to think generationally. I mean, you are already starting this with your family. You're thinking about, how do I set up my kids for their financial success? So the idea then that you have the ability to not just have one policy that you, Wesley Smith, use, but now you have a system of policies. You have an infinite banking system. You're creating this family bank, if you will, that you can decide how you want to use that. You can decide if you're, I don't know if you have sons or daughters.
Oh, one son, one daughter.
Okay, there we go. So if your son in the future comes to you and says, hey, Dad, what's up, Bruce?
No, I'm just going to say yes. I was going to clarify it. We must have a really bad delay today. I'm sorry for stepping over you all the time.
That's okay. I think the internet's a little choppy. It's okay. If your son comes to you and says, hey, Dad, I want to buy a car. Hey, Dad, I want to get married. Hey, Dad, I want to buy a house. Hey, Dad, I have this investment property I'm looking at. You could say, well, hey, look, son, you've demonstrated financial responsibility in these years leading up to this request, and I've seen you be profitable with this and this and this and these last 5 things that I've given you. I'm going to allow you to take a loan not only from your policy, but also from 3 of my policies as well, to provide the capital that you need for this venture that I believe in, and I believe that you're going to repay. And here's the payback schedule, and here's all the requirements that I have for you to access this family capital. You have the ability to do that because you've set up this system of policies. And so I love that you're thinking about how your kids can be set up for success.
Yeah, and I love that too. And so many things you've already mentioned too about, different options and the flexibility. When you put your money and you store your money here, you're not limited to anything. Like you're not having to use this money for college education, and your kid decides, hey, Dad, I'm not going to go to college. I'm going to do this. I'm going to start my own business at 20.
You're like,
hey, that's great.
Man.
Yeah, you're super excited for your kid, but you're like, what am I going to do with this $40,000 sitting in this little child, this college funding account?
29, yeah.
Yeah, when you try to take it out, you get penalized, and it's like no fault of your own. You try to do the best thing you could, but when you put it over here, there's no there's no requirement that you use it for anything that you decided you wanted to 20 years ago or 10 years ago. You can use it for anything that you want. And so part of my line of thinking is yes, I want to teach my kids how to use this infinite banking strategy. And I do a lot of training videos, just screen share videos and things like that. So I'm going to probably do that as they get older and show them kind of how to look at an illustration, how to take a policy loan, how to pay that back, what it looks like over 50, 70 years. Because I mean, gosh, if I had these, started when I was even 20 years old or 25 years old, when I first got into my professional career, I would already have a couple of these things going, and they would already be compounding like crazy at this point after funding it for 20 years, right? So it's like, you always wish you could have started this sooner once you kind of figure it out and you really start seeing it for what it is. It's a whole life contract that's beneficial to you the entire way, not just when you're 59 and a half, not just when you're 70 and you got to take required minimum distributions or whatever. You can use it anytime you want. And if you don't need the income, well, then you don't have to take the money out whenever nobody's pushing you to do that, because the tax man's not knocking for their portion of it, right? So it's like, well, in today's environment anyway, things could change, nobody knows. But I would just, like the fact that it's flexible. And so, yeah, when you look at a kid's whole life policy over 70 or 80 years, it's just amazing what those things can do over that long of a time frame. And so teaching them how to use it, teaching them how to pay back policy loans, teaching them how to use it for college funding or anything they want, down payment on a house, anything like that is just, I think it's just largely beneficial to show people and even your kids. And it's a self-sustaining system, right? So it just keeps replenishing itself. And you've always got liquidity. You don't have to be beholden to the banks, which is very tough. And I went through that whole process with real estate investing and still do sometimes. So not having to do that at a certain point in your life is a huge benefit, because the velocity of money, if you find a deal or if an opportunity knocks on your door, is more important than, a lot of other things. Like the quicker you can access the capital, and just like Nelson says, opportunities will hunt you down if you have the capital, if it's readily available. Plus you're looking for those things because you've got something there on deck to take advantage of something if it does come up. So if you have it all locked away in retirement accounts, it's just, you don't have those same possibilities. So just a lot of things there that you guys had mentioned too, that I wanted to throw out, kind of how we're going to be using them. So
I love that. I cannot tell you how much I love what you're sharing. And I think, if every person could grab a hold of the value at the youngest age possible of starting an infinite banking policy for themselves, how much better off would they be when they finally have these realizations? I mean, I wish that I had started way before we did. My husband and I got married. We had the one-term policy. It was worth $50,000 on him. Of course, at the time, I didn't think I needed any life insurance at all. And then later, as we came to this awareness, we realized we should have been funding whole life insurance on both of us the second we had cash flow, but we weren't thinking that way. And then if you can just look at how much more power you're giving to your kids to have something that started before they were able to come to that realization themselves, you're not only giving them the cash, you're also giving them the tools to be able to use it well. And just to take it another step further, one of the things that my husband and I have done in our estate planning is to set up guidelines so that if we were to pass away much earlier than we hope, I mean, we both plan to live well past age 100 and be able to have that full lifespan to invest in our kids' lives. But if for any reason our death benefit needs to pay out a lot sooner than that to our kids, we have directed then that it be used to purchase additional life insurance. So we're using this perpetuating cycle to say, hey, we really think that this is the foundation for building wealth. Use it to have that, as you said, replenishing capital. And the death benefit's always going to be more than you've ever paid in premiums, wherever you are on the timeline of that policy. So if you had multiple generations thinking this way, just think about the kind of wealth that 5 or 6 generations past you could walk into and be able to learn how to steward. I think that is just a tremendous responsibility that we have as those that have become aware of infinite banking and the power that it has in our own lives, what capabilities we can create for those coming ahead of us or behind us, I guess that would be. So
yeah, that's good stuff. I mean, I feel like I'm missing out or forgetting to mention some of the benefits of it, because there's so many of them, so many things I've came across, discovered, eye-opening moments, or reading a book and hearing somebody else's angle on it. So, which is the reason why I wanted to share today with you guys too, because it's like a lot of the interviews you guys have had have helped me kind of open my eyes to certain things you can do with it that I didn't even know before. So I feel like I'm missing on a few things, but I think just the fact that you can store your money in a liquid place, have the death benefit on top of it, you're not going to lose that rental insurance, so to speak, over the next 30 years when when you try to get a new policy for term insurance and it's 10x as much as it was before, you're not going to have that problem. You've got all the riders, the long-term care benefits, different things with it. You have income capability from your policies down the road. You have liquidity along the way for opportunities and business opportunities, whatever. There's so many benefits. I feel like I'm missing out on a few, but you guys do a good job of going over those on your podcast episodes. So I'm sure that you'll cover those.
So Rachel, the way I wanted to go in a slightly different direction now that we're been doing this for a while is I'd really like Wes to share, kind of his journey and how he, with our business owners, how he built his business, how he continues to innovate, and what kind of trends he sees. Because you being an effective internet marketing person, what kind of things could you share with some of our listeners, business owners in that realm to help them with their business?
Well, I think blockchain is coming in and going to shake up a lot of things. I don't know exactly how that's going to look in the next 5 years, heck, 3 years to for that matter. But right now, search marketing is still pretty hot and heavy. A lot of people still go to Google or they go to Bing, Yahoo, or a search platform, and they do a search for the service that they need. So we're still focused heavily on search marketing. For people's web presence, because that's where the majority of them go, whereas in the past, before the internet became dominant, it was, you get a yellow page book, you open it up, you look for a tree service contractor, plumber, whatever, and you call a couple and you're done. You get people to come out. Nowadays, those just kind of get tossed in the recycling bin or used to start bonfires or whatnot, if they still get those in the mail. So people go directly to Google, either on their phone or they go on their desktop, or, they're looking for ways to kind of solve their issue on the internet. So that's kind of where it's at right now. And where it's kind of going, I think, is more voice activated search. So a lot of people are, using their voice apps and different things like that to do similar type searches that they used to just maybe type in. I think some metaverse stuff is coming down the road, which I have no idea how that's going to look with regards to search marketing.
Do you think you're going to need tree services in the metaverse to trim the trees in the metaverse?
Right, exactly. Yeah, virtual tree service company in the metaverse. Yeah, keep down on the foliage out there. Yeah, I'm not sure how that's going to look, to be honest with you. I mean, it's kind of interesting to see how these things are going. I'm a little bit into crypto. Which is one of the ways that I do take policy loans here and there. If I see an opportunity that I think is a viable opportunity in the crypto universe, then I'll make an investment with a policy loan or something like that. But I never want to jeopardize my cash that's coming up for upcoming premiums. So I definitely will take a policy loan for something like that. So, but yeah, as far as the internet goes, I think a lot of it's going voice search, and I think things are just going to continue to evolve. But for now, it's, a lot of this is just, it's still kind of like it was 5 years ago. It's a lot of search, a lot of different things like that. Now with all this Facebook stuff and privacy acts, I'm not sure how all that stuff looks with like retargeting and things like that on the internet. But right now everything's going great. Mm-hmm.
Yeah, that seems like that retargeting. There may be a mega shift in that, right? As far as
tracking people's movements,
tracking people. Yeah. And that'll be very, very interesting how that goes. Well, obviously you have a target market. I don't know how many tree service people are going to be listening to this podcast, but is there anything else as far as your value add that sets you apart from other, effective marketing, internet marketing people in your SEO? I presume you're doing SEO optimization and so on and so forth. How do you get, I guess you get it through marketing strategies on the other internet, but how do you get your clients and so on and so forth? Any tips you can do for our business owners?
Yeah, I think just having a really good website. If you're a service-oriented business, doesn't have to be a tree service business. You could be a plumber, you could be a doctor, you could be a roofer. It doesn't really matter. If you're a business owner and you've got a business, I think a good website that just showcases your business, showcases the people, the trucks, your branding, your logos, and calls to action on the website with a call now button, get a free estimate or contact us. Just make sure all that stuff is highly visible and it works really well on a mobile device. We really focus highly on mobile search optimization because about 75-80% of all searches on the internet now are mobile device, right? So if it's not good on a mobile, quite frankly, it's just not going to convert as well as it would. So we focus heavily on that. And we've got a few other business owners that I work with from our legacy agency before we kind of niched into the tree service business. But we help them just kind of get their internet marketing right, get it all focused in and their branding focused in so that when people do a search online locally for tree service, tree removal, land clearing, forestry mulching, anything like that, they're going to get found. They're going to get that opportunity because somebody's going to click on their ad or their website, and they're going to call them to come out for an appointment. So you just want more of those. And that's what we help do for our clients and our customers. And we also pride ourselves in just good old fashioned customer service. I think there's something to be said about that now. We answer the phone, we answer emails. There's so many faceless agencies out there and companies. I mean, I just went through it with Zoom, actually, where I got fraud in my account, and the fraudster closed my account after running up a lot of charges, thousands of dollars. And so then I couldn't even get any help with Zoom, couldn't get anybody on the phone. It was kind of a nightmare, right? So a lot of these companies are trying to automate everything, but I think you can automate too far. So we try to take pride in customer service on our end, and I think we do a pretty good job of it.
That's excellent. I think there is nothing like good old-fashioned values and customer service and being good to people and doing what's right. So, I mean, I think those values translate to any good family that wants to be sustainable, translates to any business that wants to be sustainable. And Wes, I just really love you sharing what you're doing with business. And I love that tree service companies can trust you to be able to bring them the exposure and the visibility that they need to be profitable. And there's so many different types of businesses. I mean, a tree service can only work locally. So you've got to think differently if you're a business that is working across the US or across the world. And so there are probably differences per industry, but I think there's some relevant tools that can be used by any business.
So Rachel, you're saying you can't do a Zoom call and cut down a tree?
You know what? That would be interesting. You just have to have good internet being up that high, right?
Yeah, I tell you what, with COVID, it provided some challenges for a lot of our clients. It really slowed down there when it first hit. And right afterwards, they literally, every company that we work with, and I heard it around the industry, they were more busy than they ever had been in the past, because after the lockdowns kind of came out. And the great thing about it, we actually were blessed to be in a niche, and a business niche that was outdoor work, right? So a lot of the indoor companies like plumbers and HVAC and stuff like that, unless it was a complete emergency, they just didn't have a lot of business because people don't want people in their house. Whereas with tree work is outdoor. So a lot of them still were able to sustain that first 30 to 60 day lockdown period. But yeah, it's changed a little bit. People do more, virtual estimates. They'll do more picture taking and stuff like that. So it definitely, you have to evolve, I think, in any business. And so seems like everybody's working from home now too. So things have changed.
Yes, that's awesome. Well, Wes, I love that your financial system in your life is helping to fuel and fund and support the business and the family goals and mission that you have. And they're synced together. I don't know if synchronous would be the right word, but they're working together. They're mutually benefiting each other, your financial life and your business life. And I think any person listening can recognize that there's so much value in choosing to think differently and not just do finance the way that everyone is taught to do finance that doesn't really work for a business owner that's continuing to grow and create a legacy and create something for their kids that didn't exist to begin with. So thank you just for sharing with us and with our listeners the powerful journey that you've been on. I think it's tremendously valuable.
Thanks for having me.
Yeah. And when I say valuable, I mean valuable to you, valuable to us, and just valuable to anyone who's listening to hear why you are making these decisions and the level of research that went in to you feeling really comfortable. I think that's something that's really important to point out too, because if you're going to make decisions with conviction, you can't just listen to one video or one podcast or get one quick answer and say, yeah, I'm going to go ahead and do this, because it's really a commitment and you want to do anything that you're living out in your life truly with conviction. And so absolutely go get Nelson Nash's books, especially Becoming Your Own Banker, especially Warehouse of Wealth. And those are a really great starting point, but continue to educate yourself. And there's that balance between saying, well, I have to know everything before I get started. You can't do that. Otherwise you'll never get started. But you also don't want to jump into something and just say, I'll just trust someone else. Really, you want to be able to trust that you know why you're doing what you're doing and continue to educate yourself along the way and continue to evolve just the same way a business does, the same way that you're adding policies, the same way that Bruce is adding policies. We're adding policies in our family as well. And it's not something that's just a one-stop shop. It's not a one-time decision and never think about it again. It's something that's part of your life.
Yeah. And I want to say that, make sure I get this out there before we get off. I'm not sure how much time we have, but it's one of those things where everybody, I think, kind of relies on the corporation they work for to tell them, hey, look, this is what you ought to do with your money. Well, I mean, I'm not necessarily saying that doesn't work, but if you kind of look at history and you look at some of the downfalls in the stock market and different things like that, I mean, when you need the money the most, you want to make sure it's going to be there and it's going to be efficient. And so I'd say just looking at alternatives and really doing that research yourself is going to give you that confidence that you're doing the right thing with your money instead of relying on somebody else. Because I can't tell you how many times when I had my 401k or anything else that was tied to the stock market, just how like anxious I would be thinking about, okay, all this pool of money I've got over here. And then you see it dip 20 or 30% or whatever, and you feel helpless and hopeless because you don't really know what to do to eliminate or avoid that, right? You just don't know what to do. And then the fees on top of it and things like that are ongoing. And furthermore, if you need money or if you need to borrow some out of there, you get kind of a lecture from the financial company that you called that you want to pull the money out of. Hey, are you sure you want to take that out? Now's a good time to keep it in there, put more in. You're like, well, I just lost a lot of money. I don't know that I want to put more in there, but I need to borrow for this or that. And so I think just having that control and knowing why you're putting your money in these accounts and in these policies and paying the premiums and not being afraid to capitalize them as much as possible, that, once you get started with it and you get comfortable with it, you just wish you would have started earlier, and you wish you could just continue to pay more into them because you're going to be able to get all that money back and then some down the road when you need it for passive income. So I just think don't be afraid to capitalize. Get started sooner than later, start multiple policies, once you get one going, get another one going, and just keep on going with it because ultimately down the road, you're going to be glad that you've got them.
Absolutely. Absolutely.
I think that's that's Nelson Nash himself talking right there. It's probably a great time to wrap up the episode. Mm-hmm. And Wes, I just want to say thank you for taking the time. I know your time is valuable, and I just really appreciate you taking the time. And we might ask you to come on in the future again.
Yeah, absolutely. I enjoyed discussing it and sharing because, like I said, previous episodes you guys have had, previous guests have helped me kind of unlock certain ways I can use these policies and do different things with them and stuff like that, so it's keep on doing what you guys are doing. I enjoy you guys' podcast. I've got it on my podcast player. I download ones that I want to listen to too. And so thanks for having me on, and I look forward to doing it again.
Awesome. Wes, this has been a true pleasure. Thank you so much. Thank you for getting out the word. Thank you for what you're doing in your family. It's really an honor to talk with you and have you as a client.
Thanks, really Rachel. Appreciate it.
Awesome. Well, in closing, please remember success leaves clues. So model the successful few, not the crowd, and build a life and business you love.